Investing mistakes you shouldn't make in 2023. As a disclaimer, we do own some shares mentioned in the slides, and as another disclaimer, none of what we say should be taken as financial advice. This is purely educational.
Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it.
Okay, so today will be an interesting topic because we're going to be sharing with you guys our mistakes in 2022, and of course, it's going to be applicable in 2023. And we hope we're not going to repeat these mistakes again. So the first one is stubborn. And the company that I'm going to be covering is Malaysian Bulk Carriers or Maybulk. It is actually a company that I own in 2022. And the reason 2021. Yeah. And the reason why I actually own is because back then, the freight rates for dry bulk services are actually at a very astronomical, it's going up lah. And it is actually a decade long that Maybulk managed to make positive profit after 10 years. So I thought okay lah, now's the time for Maybulk to pump, right? So I actually went in after it went up quite a bit.
Okay.
By quite a bit, I mean almost the top lah. So you can see the price action lah. I actually went out, I think around 70 to 72 cents.
Okay.
It actually went up to 88 cents, I remembered. But I was thinking that, you know what? Based on my analysis, and this is very stubborn, based on my analysis, I think this company can double. And at that point of time, they were actually selling their core asset. They're selling their core, their ships, which is why their profit is actually improving also. So I was thinking that, okay lah, I mean, as long as they are making money, I think it is fine. So I just hold on, even though I actually kind of make a 10 to 20% gain already, but I didn't sell it. Then I just waited for a few more months, and then, as you know, the supply chain issue starts to ease out. I mean, there's a lot of signs that these rates are not sustainable, and hence the rates actually start to drop. And when they start to drop, of course, Maybulk also, but for Maybulk, it's actually a right move. It's a right strategy because they have been in a loss making for 10 years already. Yeah. And this is actually a good time for them to exit. But back then, I didn't read the signs. I was thinking that, okay lah, making money then is fine. Yeah. So they were exiting while I was entering to buy this asset. Yeah, they exit. And actually that caused me to make a costly mistake lah. And I actually lost I believe over 20%. Yeah, so that is actually a great lesson. So the lesson that I learned over here is that when a company is exiting their core revenue business, which is, for instance, for Maybulk is selling their ships, it should be a red flag instead of a positive one.
Yeah, it's also important just to add that market's forward looking. So that's information that's probably priced in. That's why when you bought it, the price had already moved up quite a bit, right?
Yeah, so
you need to figure out, okay, the price move up because of a short term or a temporary event. That means the price is probably not going to go up as well. But sometimes if the price move up due to a big change in the company that is long term, that is not necessarily a wrong decision.
Yes. Okay, the second one we have here is zero actions. These two companies is also something that's happening last year actually in 2022. The first company is Arilus Technology Berhad, the other one is TechCycle. So ATech is a company that I actually did mention this to the FIRL Pro members. Yeah. So if you want this kind of special updates, right, make sure you join FIRL Pro.
Yes.
We put the links in the description or the comments. So, okay, anyways, so back to ATech. It is actually a company that I actually studied on in our previous deep dive session. They were doing those EMS services for your walkie-talkies and all those stuff, industrial products and services for Motorola. So the reason why I suddenly got this idea of ATech is that I actually went to PIE's management briefing.
Right.
So in the briefing itself, that was actually the last year. I think it was the third quarter for financial 2022. And the management was actually very positive during the entire briefing. They were like saying that Q4 is going to be amazing.
Okay.
You just hope for it. I mean, I believe it's because they actually, I think they got orders. And back then also, PIE was actually quite, so it was quite stagnant. It didn't really pump up, but now I think it kind of pumped up a little bit really. But back then, ATEC was around 1 ringgit and 79 cents. So that was the time that I actually, after the briefing, I straight away said, hey, since PIE is also serving Motorola as a customer, maybe ATEC also will benefit. And since PIE's management is so positive, maybe ATEC also will be making more better contribution. So in my head, I was like thinking, okay, this is a perfect story. But
didn't take action.
Didn't take action. Reason also is because I don't have money. Yeah, that's the sad thing lah. When you're fully invested, right, and these kind of opportunities comes in, and then you're like thinking, should I sell this company? But I know this company is also good. So yeah, that's the sad thing. It is also a similar case for Tech Cycle, because Tech Cycle also, I mean, if you look at our previous video on the 3 exciting stocks for, I believe it was in January 2023, we're going to put the links in the top right-hand corner. Basically, that company announced that they are selling their properties, and it's going to 3x their profit as compared to the previous year. So when they announced that, right, on that day itself, it actually pumped out like 20-30%.
Okay.
But I actually didn't, I knew there's still some upside a little bit more, because it's just 30% only, and their profit is going to 3x. So I was like thinking, and also that time also I no money lah. So I was like thinking like, I know that it's going to go out a little bit more, but I no money again. Man. Yeah, so yeah.
It's all the time.
And then it pumped out another 35%. So that's a pretty unfortunate case for me. Yeah, so zero action.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
And I believe, MJ, you also have one company.
Yeah, so this one is Perak Transit.
Yes.
So I figure around probably here. So this would be 60 cents.
Okay.
Yeah, about 60, 70 cents that they are not a very exciting business, but they do have some form of moat in the sense that, look, everybody knows, right, what Perak is. We're from Perak. What's Perak known for?
Food?
No, it's a transit between KL and Penang.
That's right.
So that is the key thing, right? So KL and Penang are some of the most economically vibrant cities, right, in Malaysia. Perak is, we just pass by there. Then if we want to stop to eat some food, then we eat some good food. That's it, right? So if you're in the transport industry, like Perak Transit is, it's a moat. But the margins are not great. Like the bus. Again, you have to pay you have to manage the drivers, you have to pay them well, stuff like that. So it's not a great business. However, where they do make a lot more profit is the ad space. So because again, that's probably the only place where you can get buses and all that, right? So there's a lot of footfall in their terminals. So you can put advertisements there, and there's not a lot of cost to just slap an ad there and charge for it. And they also entered some warehousing, which again is also very profitable, right? You just come here, put your stuff, take it away. So I knew that the profit was going to do well and all that. However, again, didn't take any action. So it's 120 now. Saw it at 60, 70 cents.
I think that's back then. We also had a conversation after we met the management.
So we met, and in fact, I told myself and the team as well, hey, actually, at that time, it was something like 8 times, 7 times earnings, and it's growing profit. So 8 times earnings, if you reverse engineer, that's a 12% yield, plus it's growing. So this is a stock that could grow maybe even 15+% every year. So I'm like, I think quite exciting, but unfortunately, didn't take action at 60 cents, but as a disclaimer, I did take action at maybe closer to 90 cents.
Okay,
like that.
All right. Hey, so that's still pretty decent.
Not so bad, I guess.
Yep. Okay, so the next one we have here is selling early. This is also a mistake that I have made quite recently, actually. So the first one is Ken Hing International Berhad. Okay, so Looking back at this company again, it brings back all the sad memories again. So this company, I actually researched about their financials first before the qualitative side. Qualitative, I just briefly kind of know, agak know their business, but not so deeply yet. But their financial performance wise over the past 15 years, 16. That's how long I studied their annual report. They were actually pretty cash flow positive. One, revenue is growing, and then their valuation is very attractive. It's like, I believe 5x less, 5 times lesser, and this is their price to cash flow, not price to profit. And I was thinking that 17 years of price to it's pretty undervalued. So I just buy first lah. And then in that short period of time, I believe it's like 2 weeks or 3 weeks, the company suddenly pumped like 46%.
Yeah.
So I was thinking that, okay, this is an over exaggeration in the market. I need to exit before it's tanked. But little did I know, the company went up even more again.
Yeah.
So if I had held, I could have made like 2x my money. But sadly, I only made 46%. So that is Kian Hing, and I'm pretty sad about it. But it's still on my watch list. Yeah, fun fact. And the next one is Dufu Technologies. Also another unfortunate company. When it actually tanked to around 1 ringgit and 73 cents or 77 cents, I cannot remember. But that was basically my buy price. I bought it. But back then it was, I believe the management did mention that the next few quarters won't be that pleasant. Because of the HDB demand, they cannot really get much revenue. And that's where I bought the bottom. But then I sold it for like a 10% or maybe even also kind of like gain. Fortunately, it did went down, but then it suddenly went pump up again because of of course, you cannot understand market, right? Suddenly like interest rate, like lower inflation, like all the stuff. So yeah, that actually made me lose quite a bit of gains in opportunity from Dufu. But I actually should have held on because of the valuation. Because the valuation was very attractive.
Oh yeah.
But I was like, you know what? 10% gain in a few weeks, not that bad.
Yeah. It's I also somewhat made a mistake here, but it's different from yours, is that I didn't add. Because I've been holding the stock for the longest time. For those of you who follow, so when in this dip around here, I didn't add when I should have added. Yeah. So anyway. So for me, another mistake I made was SIP tag. So I was very fortunate to be able to get IPO. And at one point it was up 400%, whatever it was. Right. And what happened was, the minute it reached 100%, I sold half. So in this case, of course, it's a pleasant mistake because I still made money, but could have made more. Could have made twice the amount, but
it is what it is. And then now it's like up another 300%.
Yeah, and so but the thinking is that, look, a lot of these IPO companies have a lot of demand, right, for the stocks, and if you're able to get them, essentially it's almost a guarantee, because also there's an incentive for these companies not to have a underperforming stock, especially in the early days. SFP is definitely one of them. And so I knew enough about that to not have to touch. And these stocks are very rare. You can't get IPO price. So I got it, but I fumbled and sold half. So anyway, that's it.
Sad. Okay, so the last one, overthinking.
So last one is over. I believe there's one more. No?
No, just overthinking.
So overthinking, this one is very straightforward. Mine is a company I've been following for a long time. Obviously, it has been doing very well over the past few months, right? It dropped to a low of like nearly 40 cents, I believe.
Yes,
or 30 cents.
37 cents.
And then it's up until 70 cents now. And the story was very simple. They were in a turnaround process. And they had to invest a lot in the company because of the CUMAT. So that took a hit on the profit due to depreciation, whatever.
Right.
And it didn't, when it went even further, it became more attractive valuation-wise. But for me, I was thinking, but CUMAT is not better than Family Mart or even the new 7-Eleven. And I still hold that view. But where the overthinking came is that I forgot that even if CUMAT was the worst, or my news was the worst convenience store among everybody. They are the cheapest in terms of valuation. So if I had focused on that, I remember that, I'll be a lot richer.
Yeah, and also another fun fact, we actually covered my news on a finance video when it's at the bottom. Yeah. So yeah, if you want to look at our previous video in the past, you can click it somewhere around the corner.
We also, maybe give you guys a hint, we also covered my news in our FIRL Pro program.
Yes.
Right, just to give it out, is one of these stocks here.
Yes.
And we also covered it quite low. I think maybe, I can't remember the exact 40 cents, 50 cents, somewhere there. So you want to tell us more about the FIRL Pro program?
Yes, okay. So this is the updated version for January 2023. So far, FIRL Pro's portfolio has been on, I believe it's a double digit overall, double digit growth. And if you want to know what is FIRL Pro all about, is basically a program that can help you cut short your time in your research. So basically, we're going to be sharing you guys our stocks that we have actually high conviction on, and we will write our analysis and reports on it. And this is the proof that the moment we actually initiated that particular company, we actually managed to make money. So that's this portfolio is actually our track record. And also, we're going to be giving you at least 2 stock reports minimum every single month.
And they're very easy to read, right?
Yes.
5 to 15 minutes, that's it.
Yeah, just a cup of coffee. And also, we're going to be giving you one big picture report once every 2 months. Because economy, right, takes time also. Basically, that report tells you where the wind is blowing, how's the economy going to perform in the next few years or even months. And also, we have the free SIB for you. So if you don't know, if SIB program is our flagship educational program. It has been there for years already. I believe couple of years, 2 years. Yeah. So it's been quite long. Yeah. So if you're interested in FIRL Pro, you can actually find all the links in the description and in the comments. But if you're still not convinced, you still want to know more about it, we have a free sample for you. The links and to access the free sample is in the description and in the comments as well.
Yeah, it's better to do it on desktop. Unfortunately, the platform we use is not the best in terms of mobile. So do it on desktop. And guys, thanks for staying all the way until the end. Very excited to see you in the next video.